week's first edition of Targets in Focus, where we discuss FX forecasts for some of the most traded currency pairs, I'm joined by Dr. Valentin Hofstätter, Head of Currency Research at Raiffeisen Bank. I understand, Valentin, you expect the euro to recover a fair amount of its recent losses against the US dollar and trade back at levels not seen since late last year. What are your reasons behind these forecasts?
Scenario where the forecasts are meant to work out, we expect Greece to manage after the elections to come to terms with the European Union, which is somehow working out a compromise where on the one hand the EU will do some steps like adapt the current austerity program with some growth measures to take the sting out of the current consolidation efforts, plus also the Greek side to compromise and proceed with the vast bulk at least of the current agreed reforms, which is of course quite challenging. So we are currently on the cusp of having a second thought on this scenario. The risk is clear, of course. The risk is that Greece does not compromise after the elections. In this case, of course, the forecast would look vastly different. It's very close in our view, like some 55 to some 45%, whether we change our base case and take the Greek exit scenario instead, or if we stick with the quite optimistic forecast we have currently, and adding at the same time that the risk is high, almost as high, that we see a forced Greek exit sometimes in July probably. In this case, of course, euro would suffer much more. What is currently priced in at the level of 127, 128 is surely the risk of Greek exiting, but should this happen then after the elections, we would expect, as everybody else, major contagion for other peripheral countries, and then a reasonable target would rather be 120 or in spikes even slightly below this level.
So you think should a Greek exit happen, you think the 2010 lows of below 120 for the euro dollar could be tested?
Definitely. In a case of a Greek exit, we should see the 120, which were more or less the lows from 2010 when the Greek crisis erupted. I think it's very likely that then we would see these lows again.
What about the euro versus the safe haven yen? How do you see this pair performing during the remainder of this quarter and over the next 2 quarters of 2012? And what about your projections for the forthcoming Bank of Japan rate decision?
We don't expect much to happen from the rate decision in Japan, to be honest. So the currency pair will be driven mostly by the euro debt crisis, in a sense of we would expect the yen to remain pretty strong against the US dollar, like hovering around the 80 level for the time being for the rest of this year. Therefore, if you keep US dollar yen more or less steady, the movement that you would see in the euro-yen rate is more or less a function of the movement you see in euro-dollar. So unfortunately here the same things apply. Basically we would be quite optimistic if Greek comes to terms. It won't want to be an easy ride, but if they come to terms with the EU, no contagion, then with euro-dollar also the euro-yen would recover quite nicely. We could even see the 110, 111 level by end of this year. If Greek sees a forced exit this summer, then the lows in euro-yen would be rather at 95 or slightly below. Though we would still hope then that towards the end of the year, once the contagion takes its course and Spain and the other economies and their banking systems can be kept over water by massive EU support, secondary market purchase programs, etc., that if you see a success of these containment efforts and the contagion slowly dies down, that euro should recover quite nicely. So even in our Greek exit scenario, which would for instance then entail euro dollar 120 in the summer and euro yen 93, 95 over the summer, we would expect that by end of the year both rates recover nicely.
Okay, moving on to euro pound, which has recently reached multi-year lows. Depending on developments out of the eurozone and important economic data out of the UK this week, which could affect the British pound in the short term, where to from here for the euro pound?
Basically, we think until the Greek elections again, no matter how bad data in the UK should come out, and even if they stress the point that UK recession continues, do not underestimate that this also happens in the Eurozone. Leading indicators there are also coming out this week, like the PMIs in the Eurozone, the flash estimates, the IFO index, German business confidence survey coming out on Thursday. They will also show the counterpart to the UK, the Eurozone, mired in recession. And here we are even more pessimistic than consensus, meaning that these leading indicators should decline further. So in a relative beauty contest, what the currency usually is, we would expect the pound to remain well bid, so trading around 0.80 until the Greek elections. And then either it's a fast recovery or it's an escalation of the pound appreciation.
Thank you, Valentin. You seem a lot more bullish regarding some of the major euro crosses than other analysts I've been speaking to recently. Thank you very much. It was great to speak to you again. Now, we've got more editions of Targets in Focus coming up and plenty more exclusive interviews, so do stay tuned. Goodbye for now.